The e-commerce platform Jumia ceased operations in Tanzania just 10 days after doing the exact same thing in Cameroon. Now, the company says that the move is part of a group-wide effort to refocus operations and resources in other African markets. Jumia, as we speak, is only operational now in 12 African countries, down from 14. The retailer will still run its classified services in Tanzania through Jumia Deals. Did the exact same thing, of course, in Cameroon barely a week ago. So then, where exactly does this company go from here? Ali Kansacho, the CEO of Rich Management, is live with me in studio tonight. Welcome back.
Rama, thank you.
So,
good to see you.
The last time we had this conversation, you mentioned that you wished you'd put cash to work in Jumia.
Look,
before
when
listing.
we spoke about it, we were talking about a different era, a different world, pre-WeWork. The market was booming for this kind of thing. So from a market point of view, we've gone from a time when every boat that was put in the sea was being floated to a completely new era.
So do we make this a macro argument? I mean,
So
let's leaving aside
I think
the company
part
aside.
of it is a macro argument, right? This is that whole unicorn business, the boom days, Massa Son pumping everything up with steroids, a very different era. This sort of caught onto that Amazon of Africa. They were smart enough to list themselves, and the initial investors were probably smart enough to take some money off the table. So on a macro point of view, I think you've gone from a boom to a bust in these types of stocks. But having said that, of course, we then had the Citron research report that came after you and I spoke together. And now it looks a very sorry story. And it's told to you in the share price, right?
Indeed. A collapse of what? This is 75%.
I think we
of
got
today's
close
prices.
to $50, and we're now something like $6.
Yeah, $6.20 at this point
Yeah.
in time. But Jumia's management, when they comment about this, because they've kept the communication on this very tight. They're
It's
only
interesting,
releasing-
isn't it? The study in communications
Precisely,
actually
because
is
during the listing, it was, let's get out there, let's do interviews, let's talk about the market. They engage in this debate about whether or not they're actually an African company. Now it's a very different story. It's the occasional two-paragraph statement coming out, and they're saying that this essentially is portfolio optimization. In our world, that basically is code for we're cleaning house. So where's the
Yes.
next domino going to fall?
Well, I'm flabbergasted. So I think, decisions like Cameroon and Tanzania are probably sensible ones. They probably just are not scaling up at the speed they were hoping they would scale up at. They seem to be concentrating on Egypt and Nigeria, big markets, big opportunities. But, they're talking about spinning out Jumia Pay. I think it's going to take more money. I don't think they're going to get to that break-even point quickly. They don't have the firepower to make it, in my view, now. I mean, given the way the market is. I think in the go-go period, they would have raised more capital. They would have done a secondary issue. People would have been still excited about it. But now, I don't see how those numbers are going to make up. I was looking at the sort of total sales volume. The margins are just not there, I don't think. I think you've got to have deeper pockets. They'll be taken over by somebody.
But at a fundamental basis, we're going to come back to the question of the defensive play later, but even just at a fundamental basis, before they put up their notes, they'd already burned through $900 million.
That's right.
By the end of September, they're talking of losses of about $150 million on top of that. So,
And a market capitalization now of what, 400 million?
which has basically collapsed.
Yes.
It's not even worth talking about.
So it's a negative equity position, and a
but
big one.
Is this fundamentally a question of they just came in here into the African market, to a bunch of countries, and thought, oh, we're seeing some interesting growth numbers, we're seeing big population numbers, but the execution just wasn't there?
Well, that's what I think, the likes of Rebecca and Echong have been criticizing them for, and saying actually there was a lot of spin on the execution. It just the execution wasn't what was written on the label, and it's difficult to execute in our markets, Ramo. We're not consolidated European, Chinese, or US markets. We're very fragmented. Just getting the delivery right is so complicated.
But there's a counter argument to that, though, and I saw this coming up in trading circles locally. The argument being that if you're looking at Kenya, for example, or, well, let's leave Nigeria to the equation, but a market like Kenya, you've got a reasonably functional postal system. It's been running for the better part of 6 decades.
Yes.
But isn't the problem here that a lot of these tech firms show up and they say, well, I don't want to work with that. Let me set up something entirely different on my own. And we ignore something that's not as sexy,
Yes.
but it works.
Does it?
It does.
Oh, yes. Okay. I just haven't had a post office box for years.
But you can still send a letter.
Yes, you know,
It'll still
true-
get from
true
point A
enough.
to point B.
So that's an interesting point, whether they thought they could just reinvent the whole logistics thing. I think reinventing logistics and delivery is a highly complex task, and I think there are people who specialize in that. Someone like Jumia, I don't think, had the skill set to do that in multiple jurisdictions. But having said all of that, if you look at the take-up of the smartphone, you look at how people are living today, you would have thought there was an opportunity here, but I think it's a long tail, and I think you've got to have deeper pockets, and I think you've got to be able to stay in there for much longer. And I think their fundamental problem is negative equity, lack of cash, and post-Citroën and in this new environment where people really don't have as much faith in that sort of profit type CEO.
With the blitzscaling model.
Blitzscaling model, you know, people don't have the patience. I mean, you've seen that in much bigger companies which have blitzscaled. I mean, take Uber, for example. Huge number of daily trips being made, but people have become much more skeptical.
Right, and of course Dario is facing problems with the loss of business in London.
Yes.
In April, you mentioned one of the areas we explored is that this might be a defensive play
Yes.
for Rocket Internet. List the company and hope that someone snaps it up. But
Yes.
in this environment, right, where people like Masayoshi Son have been humbled, does that argument still have any merit to it? Is there anything worth buying here?
I think that's a really interesting question, and I'm sure a lot of people are running the slide rule over it. I think the interesting point is that they are still in a number of African countries, and if you were a big player, you know, like of Jeff Bezos, because they kept calling themselves the Amazon of Africa, you know, it might be an interesting play and a very cheap asset to pick up, but basically a free option. I would think for those big boys, it looks to me like even an Alibaba, for example, I would have thought would look at it and say, look, $500 million to get into multiple countries with some infrastructure, and we can then beef it up. I think that's the way out for shareholders right now. Whether they're going to pay any kind of premium on the current price is a different matter.
Well, we'll
but
see
really, it's like a salutary lesson, isn't it? All in the space of less than 12 months.
It's I'm struggling to find a faster crash in share prices.
No, and I must say, you did call it. I was more optimistic. I was seeing a more bullish market at that time, but obviously those days have gone.
Well, cash is king. One last question for you. So one of the things that we spoke about again in April was, okay, now we're seeing African businesses, or rather businesses being built in Africa. Let's not call it an African business, that's a separate debate.
Yeah.
A business being built in Africa, tapping into capital markets in the West. But given what we've seen with Jumia, does this ruin the prospects of any other African unicorn, for lack of a better word, to raise capital in the West?
I think it improves the opportunity for indigenous African unicorns to raise capital, because people will see that this was truly not an African managed company. It was African in name, it was operating in Africa, but it was run by folks out of Germany and all kinds of places.
With offices in Dubai.
Offices in Dubai. And I think what people are going to say to themselves is we're better off having our management on the ground, embedded in the ground, understanding what's going on. And that's why I think this is actually an optimistic moment for African entrepreneurs.
Ali Sachu, thank you very much for coming in.
Thank you for having me.